Okay, so the narrowest range, what we're doing is counting 4 bars. Okay, so as soon as we get this bar closing, we have, next bar is 1, then 2, then 3, and now 4. Now as soon as we have that that 4th bar, that's when we want to start looking for our narrow range bar. Now it may have come earlier, but we won't know that until the 4th day is done. And there are 2 possible trades here. As an aggressive trader, you can take, after the 4th bar, you can take the narrowest range. So we have the 4th bar here. It could come on this bar or after. Okay, it is after. That's the key here to this first trade. After the 4th bar is formed, we can look as aggressive traders and trade if the market breaks above the high long. So we would buy. Remember, the market's moving down, so we're looking to buy as the market pushes up. Or we can look to sell if the market breaks below the low. Okay, that's an aggressive trader, and hopefully you remember the example at the live event as an aggressive trader, what you have to look forward to. Now remember, there's another trade in here, isn't there? You take the high of the 4 bars, or the low of the 4 bars, and use that as a breakout. Okay, expecting that the move is going to start going up. The next trade would be waiting for the market to break through. On a continuation trade here would be to break through the hand here. Remember the hand. We have 1, 2 lower, or 1, 2 higher lows, 1, 2 higher lows. That puts our point right there. Okay, so we've got the short trade to the downside. We also have another hand right here giving us a breakout to the downside. Okay, let's talk about these prices. I'm pegging this one. Go ahead and give me a cursor. Okay, so to the downside, it'd be going short below 15.58 and or 114.18. So it'd be short below 15.58 or 14.18. 15.58, 14.18, short. Okay? To the going long. Now, you'll notice that if you're waiting for the hands, if you're a conservative trader, you really do want to always wait for a hand to form. What does that mean? You want to wait for the higher highs. So if the market's moving up, you want to see it do this. So you have the 2 lower highs, 2 lower highs. And as you can see, this point, even though it is the breakout area, it doesn't form a hand necessarily, right? Because you don't have 2 lower highs. See how this high is higher? And this one is not a point yet because we need 1, 2 more highs over here. Since this is a daily chart, we'd have to wait for 2 days. And that's fine. If you're a conservative trader, that's a perfectly reasonable response, is to wait for those 2 days to form and see what happens. So that's what's forming up on the pound. Let's go ahead and we'll just look at that's what's forming up on the yen, pardon me. We'll just go ahead and look at the pound here. The pound actually is already underway, isn't it? Okay, the market started to do the weave over here, and even though it went sideways, look at this. Interesting how on the daily bars here for the pound, even though the market was going sideways, the weave didn't really start until right about there. So you had a little bit of the weave in here, but then they separated right back and started going. So the last long trade was above there for the pound. So it's underway. So now what are we waiting for? We're waiting for the hand. So here we have 1,